So one stock that has been attracting investor attention over the last couple of weeks is Tata Motors. It recently eclipsed Maruti to become the largest automaker by market cap. Now this comes with good enough reason. So to put this in perspective, if you bought a Tata Motors stock in March 2020, it would have costed you 67 rupees. The stock today trades close to 1,000 rupees, generating 1200% returns on an investment in less than 4 years. The rally has been justified from what I believe, but Tushar has more perspective on that.
Okay.
Tushar, Tata Motors is a significant counter,
Yeah.
and it's been in the news every other day in the last few weeks.
Yep.
A large part of that coming in on back of a very solid earnings they posted this quarter.
So, Samina, hi. So, first of all, let's start the conversations on the earnings. It's about a week, 10 days since Tata Motors declared its numbers. We had seen its profitability or the EBITDA margin of Tata Motors coming in at 13.5 odd %, which is beating estimates set by Bloomberg. Within that space, the JLR piece had an operational profitability of 16.5%, which shows that the JLR business is actually firing for the company. What we have to also understand is that the passenger vehicle business has not deteriorated. There has been some pain points in CV because it's a cyclical business. But overall, what we are seeing as far as Tata Motors is concerned, that the runway looks good for the company. The numbers give that comfort to investors, that the runway looks very good. The sales are there, both in the JLR business, in the key markets of US, Europe, and China. So overall, that's why you see that run up in the stock in the last week or 10 days.
And the recent shift is attributed to a sharp turnaround, not just in one quarter. The last couple of years, they've swung to a profit after massive losses they posted in FY19.
Absolutely. So what we are seeing is where you started the conversation, that Tata Motors has eclipsed Maruti Suzuki in terms of market cap. We have to remember that that is not just a one quarter phenomenon. It's just a build-up of the revival that Tata Motors has seen over the last 3 years. Over the same time period, the company has paid its debt. Chairman Chandrasekaran had actually said in its latest annual report that the company wants to make its India business debt-free in FY25, and at the group level, at the Tata Motors group level, debt-free in the next one more year. So that is a massive turnaround for a company that has been historically saddled with debt and pulled down by the debt it had. So these two factors. Apart from that, India sales have been robust month on month. It may be still 15% of the market, but it still competes with Hyundai when it comes to the number 2 slot. Another piece is the EV piece. It's something where its peers have not been able to crack so far.
So just very quickly, so these are reasons of why the stock has done well so far. Now, if an investor is looking to buy Tata Motors at 1,000 odd rupees, give us perspective into what the outlook is. Is it the EV bet?
So a lot of people will say that it's a pricey stock. Maybe the EV part or the EV component of the business is already priced in. What I believe is that entire space, the electric vehicle space, is still in a flux.
Okay.
So it is a technology that's evolving. It's a once in a generation shift. It's once in a century shift from ICE engines to electric mobility. And Tata Motors is at the forefront of it, but it's still not over.
Right.
We'll still see some more churn in the space. We'll still see Tata Motors gaining at the expense of, say, a Maruti Suzuki or a Hyundai, who are yet to launch a meaningful product in that sweet spot of 10 lakh to 20 lakh rupees.
So that's the outlook. And talking about those valuations that some would argue look stretched. So just to put that in perspective, Maruti's return on equity, an average return on equity, is 12% over 10 years, as compared to maybe a Tata Motors, which is 5%. The other thing you want to keep in mind is price to book. The stock looks expensive as compared to its historic average. Its average is 2.2 times. Currently, it trades at 5.5 times, which is a 175% premium to its own historical average. So it is an expensive stock, some would argue, but others do believe that the outlook for the EV space is uncharted. We are just scratching the surface and could continue to see a strong rally playing out for Tata Motors.
Absolutely.
And if you are looking to buy the stock, please do your own research. And of course, then you can go out and do your trade.